Hello everyone. Thank you for taking your time. Myself Anmol Gupta and today's presentation is about investment in corporate bond. So let's begin. So before moving forward, I would like to discuss that this presentation has been divided into 8 key topics. These starting from understanding the corporate bond, the types of corporate bonds, who should invest, the advantages, key things to remember before investing, what is RDG account, opening of RDG account, the process, and last the conclusion. So what are corporate bonds? A corporate bond is basically a type of debt security that is issued by a firm to raise an amount of finance for a variety of reasons, such as to promote operations or to expand the business. And these investments can be made basically through two ways. An investor can buy individual corporate bonds through a broker, or the second option is via to go through mutual funds or the ETFs. Now we'll discuss the different types of the corporate bonds. The type 1 corporate bonds basically invest in high rated companies like PSU companies and the banks. And the other type 2, they invest in slightly lower rated companies such as AA and below. And these AA and below is basically the ratings of those companies. Classification of corporate bonds can be divided on the coupon and maturity period as well. So based on the coupons, bonds can be divided into fixed, flexible and zero coupon based. So such coupon carries an interest rate that remains fixed throughout the tenure or the maturity in the fixed coupon bonds. The flexible coupon on the other hand offers flexible interest rates. The other classification is the based on maturity. The bonds can be divided into short term, long term, medium term, or even at the perpetual based. So here bonds with less than 1 year maturity are called short terms. The ones with 1 to 5 years are medium, and with the maturity period of more than 5 years are long term bonds. Now the question arises, who should invest in corporate bonds? See, the corporate bonds are an excellent choice for investors looking for a fixed but a higher income from a safe options. They are a low risk investment vehicle when compared to debt funds, as it ensures capital protection. Although these bonds are not entirely safe, if you opt for corporate bonds that invest in high quality debt instruments, then it can serve your financial goals better. Long term debt funds often tend to become riskier when interest rates fluctuate beyond the expectations. They usually go for an investment horizon of 1 to 4 years. This can be an added benefit also. If you remain invested for up to let's say 3 years, it can also prove to be more tax efficient if you fall in the highest income tax slabs. What are the advantages of corporate bonds? So one of the major advantages basically it's ideal for the money that you don't need. For 2 3 years you can invest in these bonds. And these bonds basically tend to deliver better returns as compared to bank FDs of similar time duration. You can compare the interest rates as well. And as I already told earlier, these can be also be proved to be tax efficient if you're holding them for 3 or more years. So these are basically 2 3 major advantages of the corporate bonds. Now, so what are the key points to remember before investing in corporate bonds? So when you are before investing to corporate bond, you should look at it as a long-term investment. You should have a long-term perspective because these corporate bond funds invest in corporate debentures and bonds that of medium to long-term tenure. So you should have a long tenure horizon. The second one is you should also do your own research. You should have a bit of market knowledge, else you won't be able to understand the potential risk and the market trends going on. And the next one is like remember that a large number of defaults within your fund's portfolio that can lead to a severe drag in returns. So if you are investing in them, then don't let past year returns influence your decision. They might be the parameters, but there are other end reasons that they have performed like that. So these are three major keynotes that you should take note of before investing into corporate bonds. What is the RDG account or the retail direct gilt account? It is the facility given to retail investors, that is the individuals, to open an online RDG account with RBI, and with the help of those accounts, individuals can be used to participate in the issuance of government securities, the GSEC, and secondary market operations through the screen-based NDS own system. And these RDG accounts can link to their saving bank accounts as well. So now we'll discuss how to open the RDG account with RBI, who can open it, the process and the portal. So any retail investors can open the RDG account with following: with a bank account and PAN. They should have a valid documents for KYC like PAN, passport or driving license or Aadhaar, valid email ID, registered mobile number, and an RDG account can be opened individually as well as jointly with another retail investor. Now, what is the process and the portal? The process: the investor needs to fill up all the details, includes name, PAN, mobile number, bank account details. So after OTP authentication and email ID is done, verified, the tracking number is allotted. After that, the KYC verification process of the investor begins and is carried out, and also the bank account of the investor is verified. So once the process is completed of the KYC, the RDG account is opened in the investor's name. Now the portal, the RDG account can be opened online by visiting the following link that is mentioned: rbiretaildirect.org.in. You will find all the details here. Now I would like to sum up by pointing out that if you are an investor and looking for a fixed income scheme to invest for medium to long term horizon, and don't want to take too much risk on your investment, corporate bonds are the best option for you. Means of investments that can depend on your knowledge and expertise. Thank you, everyone. You can feel free to call us, drop your queries. Our phone number, our email address, our website is mentioned, and we'll be happy to answer your queries. Thank you, everyone.